Hey there, it's Justin Heminger with Apex Realty Group at Real Broker, and I'm joined today with BETHANIE YOAKUM with First Rate Financial, and we're going to talk about some recent articles that came out talking about the Federal Reserve and possible interest rate reduction coming up in 2024. There's been a lot of talk about it. What does it mean for 2024? What does it mean for our buyers right now? And what do we need to know kind of going forward? BETHANIE, again, thanks for joining us. And let's just get started. What does all of this mean? What's happening with the Federal Reserve?
Yeah, the Federal Reserve, been all over the place. And I'm sure that everybody's seen on the media that the Federal Reserve is cutting their rates. And I've seen 3 rate cuts. I've seen 6 rate cuts. The whole purpose behind the rate cuts is because the Federal Reserve is finally seeing that the economy is starting to slow down, right? And so the whole job of the Federal Reserve is to fight inflation. And so during COVID, they did what was called quantitative easing. And so they bought millions of dollars of mortgage-backed securities. That's why we saw those interest rates during that time stay around that 2 to 3%. And they stayed there, for a couple of years, all while inflation was going up, right? And so now they're kind of like playing catch up a little bit, or they have for the past couple of years. That's why we saw interest rates go from that like 3% all the way, and they just started going up really quickly than what we normally see. And so over the past year and a half, we've seen those rates go up, and then they kind of peaked at the end of October of this year. That's when rates were about that like 8.125, 8.25 on a conventional loan. And then recently, with the information that has come out, they've seen the jobs markets kind of slow down a little bit. They've seen just indicators of the economy slowing down. And so they've announced some potential rate cuts in 2024, and they've also stopped doing the rate hikes. And so we've seen the mortgage-backed security, the Treasury, which impacts mortgage rates. We've seen that be beneficial. So we have seen mortgage rates come down a little bit. If you had an 8.25 interest rate and now you could get like a 6.99% interest rate, that's going to save you about $200 a month. I don't know if I would just start on doing a refinance quite yet. I think it's a little bit ahead of the game. But what I do think is going to happen, and I just want to say, I'm not like an economist. Like, this is just my own personal opinion of doing mortgages for years here in Alaska. But doing a refinance right now would be a little bit ahead of the game. I would just wait a little bit longer. March is when they're really thinking that we'll start to see a little bit more momentum on those mortgage rate drops. But what I have seen in this past week with these interest rates that have dropped significantly very quickly is I've seen a lot of buyers thought that rates, were still maybe even 7.5, that if you're VA moving up here, just a month ago, they were 7.5, but I priced one out yesterday, and just for about a point, it was like at 5.875. And that got him in the price range for his monthly payment where he wanted to be. And so where he thought he had to wait until March, maybe find some short-term housing, was going to be here in January, didn't think he was going to be able to buy until March, where now it's a possibility. And so he's possibly got to start looking. And I've also seen a lot of competing offers. 3 weeks ago, we didn't have anybody who was competing. The offers that were accepted were the only offer on a home. They had seller credits, were offering below asking price, where now they're offering above asking price, guaranteeing, $5,000 over appraised value and paying every closing cost. So the competition is definitely starting to come out, which is what we saw when rates were low and during COVID.
Right. And that was a really, really painful time for buyers. And those buyers are now, and have been our new sellers. And now they're starting to get a little bit back, which is nice, but it's been tough for them here recently. Thinking about moving to Fairbanks? Well, click on the link below for my free relocation guide, where I talk about top schools, top neighborhoods, and so much more.
For 2024, I think if we're talking about some sort of projection, everybody wants to know, like, when is the right time to do everything,
Mm-hmm.
We don't have a crystal ball. I know I mentioned March was potentially a really good time that we could start happening. But really by the end of 2024, like November timeframe, they're projecting, again, not a crystal ball, that rates are going to be hopefully in the 5s. So somewhere in that range is what we're hoping to see.
And we had talked about that before, the difference between kind of the 8% interest rates that we were seeing over the summer versus like a 5% interest rate, looking at a $300,000 price range. I think it was like almost a $500 difference in monthly payment. So kind of knowing that in advance, although we don't have a crystal ball that's going to say for sure, nothing wild's going to happen in the rest of the world that could possibly, change that. Who knows? But if we do end up there, being in a financial situation where we can actually, take advantage of a 5% interest rate would be pretty awesome.
Yep.
So doing all of the things that we've talked about in the past to get yourself ready by that time would be pretty awesome. Yeah.
I agree. And that's a really good point, Justin, is to keep yourself in a financial position where you are not opening too many lines of credit. Lots of new lines of credit are going to impact your credit score. Make all your payments on time. You want to increase your credit score as much as you can. Going to maximize the credit that's available to you on what interest rate you can get. Typically, a better interest rate or better credit score is going to get you a better interest rate, right? And so, also, I know it's Christmas time and everybody's shopping and times are hard right now, but if you can withhold from maxing out those credit cards, try not to do that too.
Luckily with one of these things, I might be wrong about this, but with the Federal Reserve doing a little bit of this easing back on rates and whatnot, it's not just mortgage rates that get pulled back. It's good all rates all across the board. So when that happens, there's a little bit of easing all the way across the board. So we kind of feel a little bit of relief in terms of all of our spending. So like we've already started to see it a little bit up here in terms of our gas prices. We were well over $4.25, almost $4.30, $4.50 even there around October, and now we're down around $3.50. Being to save a whole dollar on gallon gas is pretty nice.
Yeah, I enjoy it. I enjoy a dollar savings.
But being able to see savings in kind of all areas of our lives is going to be pretty nice. We're starting to see it. If we can apply all of that savings to, making our finances putting our finances in a situation where when the time comes that mortgage interest rates are also low, we're ready to pull the trigger on getting into a home. That'll put us in a really good spot.
Yeah. I think also setting yourself up is just like having a little savings set aside. Even if you are VA and you're PCSing up here, yes, it is a 0% down loan program. However, if you're still paying closing costs, you're still going to have to show that that's in your bank account. You have to put up earnest money when you write an offer, all those kinds of things. You have to see those, a lender's going to have to see those coming out of your bank account. And so we're going to have to verify the source of those. So if you could just start at low savings on the side, have that stock ready to go so that you can be competitive when you come up here to secure the home for your family that you guys need.
And another cool benefit, you don't have to do it, but with VA loans, you could put a down payment down if you wanted to, and it could reduce the amount of the funding fee that you put down too, at closing. It doesn't sound like much, but when you go to turn around and sell and you haven't had to over that time that you've owned the home, and you don't have to, pay down that other 3.5% that you financed when you bought, that's pretty fancy. Also pretty interesting about this is, and I've talked about this before, like the downside of getting yourself, or getting your finances in a really great situation to buy in, let's say, November 2024. If we get there and interest rates are still like at 8%, like let's say there's something that happens and our economy is not so great and we're looking at the same rates that we were in October 23, but we've taken the time to get our finances in a situation where our credit score is great, the income ratio is low, we've got some cash in the bank, and we're actually ready to buy, and we've got pretty good credit scores and whatnot. There is no downside to that. We're still in a great position to buy, and we can still move forward. There is no downside to getting yourself and your finances squared away.
I think the best time to buy is when it's appropriate for your family. And so if it's time for you to expand, you've outgrown your home, and there's always a plus side and there's always a downside to a market, right? When rates are low, you're competing with everybody and you're praised value and asking price. But when the rates are higher, your monthly payment's higher, but you're not competing, and you can always refinance down the road. So there's always a plus and a minus to every single situation. So it's best to just work with a professional who can help you decide if this is like a payment that you can afford right now. Hopefully you can get the payment down lower down the road, and work with a realtor that you like and trust, and that, that is going to help navigate the market with you and for you and guide you in the right direction and help negotiate a great deal for you and your family.
Right. All of that is important. And working with a great local lender, just like Bethany Yoakum. Right on. Well, hey, thanks for sitting down and talking with us about all this news and breaking this down, because it could be daunting. A lot of it looks like it is on the face of it, like, yay, smiles and rainbows, this is for sure happening, but it's a little bit more involved than that, and it pays to be informed about it. So this has been really helpful, and I'm really happy that we're able to get this information to our viewers. So thank you so much.
Yeah, thank you so much for having me.
So there you go. If you have questions about interest rates, you can absolutely get in contact with Bethany Real Estate. I'd be happy to answer any questions you have. There's contact information for Bethany down in the description, and you can always reach out to us at 907-885-0316. Thank you so much and have a great day.